As bearish as I was when we were at 65 to 69,000, I would say I'm lukewarm now on Bitcoin.
Okay.
It doesn't mean I think the bottom is in, but you're right. Let's take a look at the chart of Bitcoin. This is something I want to show you guys.
Yeah.
So here we have, this is the drop on the Terra Luna collapse. And we dropped from about 31,000 and change down to about 17 and change. And so that drop was about 40+%. Now, if you look at the collapse of FTX, Bitcoin only dropped 25%. And so you could argue that FTX was a much bigger blow up in terms of institutional money being involved and kind of the earthquake that it caused, yet Bitcoin dropped less. And so to me, I take that as a signal that says, okay, it's not the end yet, but we're getting there. And so a couple of the analysis points. So number one, I looked at the comparisons of FTX's blow up and the Lehman Brothers collapse in '08, noticing again, Lehman was a bank. It collapsed. An exchange, FTX, kind of like a bank, but in crypto, it collapsed. Now, how long did the S&P 500 take to bottom after Lehman Brothers? And the answer is it took about 6 months. So then extrapolate that out and say, okay, in 6 months from now, we might be seeing the bottom in Bitcoin. And the reason you can kind of extrapolate this out is because human emotion, you could say, oh, well, that's stocks, this is crypto. But the answer is it's all the same. And the reason it's the same is because humans, you and me, we're the buyers and sellers. And does your emotion change? Does my emotion change? No, greed and fear. It's what rules the market. So you can really extrapolate that out. And the last thing I'll say is, the S&P, when Lehman collapsed, fell another 45% from that point, from that collapse, before it bottomed in March '09. In that case, we should see Bitcoin fall approximately 45% more from approximately that, breakdown level around 18,000 and change. To me, that gives me a target just below 10,000. And keep in mind that max pain is caused when even numbers are broken. You'll see a ton of stops run at 10,000. That could be the bottom when it breaks into the 9,000s.
Just real quick about, is that psychological?
Yeah.
Okay.
Yes, it's and again, the three factors, always remember, an investor has three factors to them. Number one is personal discipline. So you have to be a disciplined investor. Yes. Number two is human psychology.
Yes.
And that's this part where charts will match up. History repeats generally, or at least rhymes, because of the human emotion and the human psychology. And the last is understanding how to read that through the charts. Mm-hmm.
Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing Gareth Soloway updates about the key reasons why global investors will face unprecedented turmoil in 2023, an impending global recession, persistently high inflation, and aggressive monetary policies worldwide.
I think Bitcoin is starting to get into that mode of being between the two, right? So I think what you're going to see, and this goes with the predictions, right, for 2023, where the NASDAQ and the S&P are going to continue down. But what I'm saying is Bitcoin's going to actually bottom out and actually start to turn up in 2023. So that means it has to decouple from risk assets. And the key to this is going to be regulation. As much as everyone hated the idea of regulation in crypto, now we see an FTX scenario and everyone's saying, all right, well, you need some transparency. You need audits. You need to see the books on these players. There has to be rules where they can't take customer funds and put it in other places. And I think that's going to be the key that really starts to trigger Bitcoin's next move up, is when you get regulation, institutions will finally start to come back to invest in Bitcoin.
Okay.
Bitcoin price crashed to $15,500 on November 21st, driving the price to its lowest level in 2 years. The 2-day-long correction totaled an 8% downtrend and wiped out $230 million worth of leverage-long futures contracts.
In general, as a psychological trader, and part of trading is understanding human emotion and understanding that when the whole crowd, when every single person is rushing into an asset, that's usually the mark of a top. And you saw this, we saw this in 2007 with the housing market, when Time Magazine featured like the home flipper on their front page. It's exactly the same thing. When you have the mom and pop saying, hey, this is so easy, I can't believe how much money I'm making, it's usually the end of the move. And then you look at the charts and you understand the massive move that has gone on, the double top that we saw in Bitcoin, all the factors out there. To me, it was one of those no-brainer scenarios. Plus, let's not forget that by November, when Bitcoin was topping, we knew the Fed was going to start raising rates, right? We already saw inflation spiking, and everyone was saying, oh, like, listen, inflation's spiking, so Bitcoin has to go higher. But the essence of it is inflation spiking. Bitcoin was already factoring that in. Now it had to factor in the major tightening that the Fed was going to bring in. And remember, there was so much money that had been thrown into the Bitcoin market, from checks going to Americans from the government, from quantitative easing, from all the stimulus. People were home. They weren't driving to work, so they were saving on gas money. They weren't taking vacations, so they had extra money. So all that money was going into crypto or stocks. Now, all of a sudden, you get to a point where the Fed starts sucking out that liquidity, and there's really no other way for any assets to continue up, and we've seen that here.
Investors' main concern is still the possibility of a recession if the U.S. Federal Reserve raises rates for longer than expected. Proof of this comes from December 2 data, which showed that 263,000 jobs were created in November, signaling the Fed's effort to slow the economy and bring down inflation remains a work in progress.
Yeah, so you're right on that. 50 basis points is what the market's pricing in. I think that's a no-brainer for next week. My guess is that they'll go to 25 basis point hike after that. And again, I'm looking at the symmetry of what they did, right? When they started raising rates, they started with a 25, they went to 50, then they had 475 hikes, and now they're kind of coming down the mountain on the other side with a 50 and likely 25. And I think by the end of the first quarter of 2023, they're basically not hiking anymore. But the kicker is they're not going to be cutting rates either, and I think that's going to be the shock for the market.
The open interest for the December 9 options expiry is $320 million, but the actual figure will be lower since bears were expecting sub $15,500 price levels. These traders became overconfident after Bitcoin traded below $16,000 on November 22nd.
So I do think inflation will remain elevated, right?
Yep.
And elevated to me means 3 to 4%, maybe 5%. So again, it's already coming down. We know it's coming down. Oil prices have come down quite a bit. That's helping bring inflation down. But the key is does it go back to 2 or under percent, which is what the Fed wants? And my answer is no. The wage inflation is going to be sticky. Always keep in mind that when people get paid double what they were making, it's not like that business can double the price of an orange the very next day, right? So it has to be passed through over the course of a series of, let's say, years. And so what's going to happen is you're going to see prices incrementally move up year over year to compensate for the hike in wages that we've seen around the globe. And I think that's going to mean that inflation stays north of 3% for at least 2 years.
Okay.
Bitcoin bulls need to push the price above $18,000 to secure a potential $130 million profit. On the other hand, the bears' best-case scenario requires a slight push below $16,500 to maximize their gains.
No, not necessarily, right? There's always opportunities out there. In fact, bear markets give you one of the best opportunities to buy stocks.
Well, hold on.
At
Are you talking
levels.
about a bear market or just flatlining? Because there's a difference here.
No, I think we're actually absolutely in a bear market. In fact, I think 2023 is going to be even worse than 2022 in terms of downside in the stock market. But there are places to go, right? There's gold. I mean, gold, again, great performing asset. It's a great, if you look back and compare the 70s and the early 80s in gold, it's an amazing replication of what we're seeing now, yet we just haven't started the big move up in gold that should be coming. So there's lots of places to go. And I would say this is that, in general, long-term investors have had their field day since the Fed began bailing the markets out. It's now becoming more of a trader's market where you buy, but then you can't just say, hey, I'm going to tuck this away for 20 years. You want to actually just take the profits and run and then look to rebuy on the next dip.
Bitcoin bulls just had $230 million leverage long positions liquidated in 2 days, so they might have less margin required to support the price.
Right. So, and this is the other thing that people have to realize, that you can look at past recessions, like you can even look at 2008 and 2009, but you have to ask yourself, how did we get out of 2009? And the answer is the Fed came in and bailed us out. They started printing money. They started to do things like that. Now, what happens? How long can a bear market last when you don't have the Federal Reserve? And I think as investors, we have to go on that assumption unless we see inflation get down towards 2%.
So how long do you think this current bear market will last? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.